Something unusual may be happening inside Iraq's financial system. There has been no official announcement of a dramatic revaluation of the Iraqi dinar. There is no confirmed date, and there is no guarantee that the dinar will suddenly become much more valuable. But several important developments are reportedly happening at the same time. A possible review of the central bank's exchange rate policy, a widening gap between the official and parallel market rates, a major court ruling involving currency redenomination, changes in Iraq's foreign exchange reserves, and progress in international banking relationships. Individually, these developments may not mean much, but when they appear together, they create a financial story that is worth watching. So, what exactly is happening in Iraq during August 2026? Let's start with the first signal. The Central Bank of Iraq may have reopened its exchange rate review. According to the claims discussed in this video, Iraq's official exchange rate has remained around 1210 Iraqi dinars per US dollar since February 2023. For more than 3 years, this exchange rate framework has been an important part of Iraq's monetary policy. Banks, businesses, government institutions, and consumers have all had to operate within this system. But the latest claim says the central bank has now formally reopened its review of the exchange rate. If confirmed, this would be an important development. However, a review does not automatically mean a revaluation. Central banks review exchange rate policies for many reasons. They look at inflation, they examine foreign exchange reserves, they monitor imports and exports, they consider government finances, and they watch the difference between the official exchange rate and what is actually happening in the market. So, the most important question is not simply whether the CBI is reviewing the rate. The real question is what policymakers decide after that review. And this brings us to the second signal, the parallel market gap. According to the figures presented in the video, on the 17th of August 2026, the parallel market rate reached approximately 151,500 Iraqi dinars for 100 US dollars. That is around 15 dinars per dollar. Compared with the official rate referenced in the video, this represents a significant gap. And that gap matters. When the official exchange rate and the market rate move too far apart, pressure can build throughout the financial system. Importers notice it, businesses notice it, consumers notice it, banks notice it, and eventually policymakers have to decide whether the difference can continue. The video describes this as an unsustainable misalignment. It also compares the situation with Iraq's previous exchange rate adjustment when the official rate moved from approximately 1,460 to 1,310 dinars per dollar. But history should not be treated as a guarantee. Just because Iraq changed its exchange rate before does not mean it will automatically repeat the same move today. Economic conditions are different, global markets are different, and the central bank may have different priorities. Still, a widening gap between the official and parallel markets is something worth monitoring. Now comes the third signal, and this one involves Iraq's Supreme Court. According to the claims presented in the video, Iraq's federal Supreme Court has ruled that the Council of Ministers can advance a currency redenomination without requiring a separate parliamentary vote. This sounds extremely important, but there is one distinction that viewers absolutely need to understand. Redenomination is not the same thing as revaluation. Redenomination means changing the numerical structure of a currency. For example, if a country removes 3 zeros, a price of 10,000 units could become 10 units. But if salaries, savings, prices, and contracts are converted at the same ratio, the actual purchasing power does not automatically change. The numbers become smaller. The currency becomes easier to account for. But people do not suddenly become thousands of times richer. That is redenomination. Revaluation is different. A revaluation means changing the currency's value relative to another currency. That can have real economic consequences. So, even if the court ruling is accurate, it should not be interpreted as confirmation of an imminent dinar revaluation. The ruling reportedly concerns the legal process for redenomination. It does not confirm that Iraq has decided to dramatically increase the dinar's value. Now let's look at Iraq's reserves. And this is where the picture becomes more complicated. The video cites figures indicating that Parliament confirmed approximately 109 trillion Iraqi dinars in reserves. Using the exchange rate referenced in the video, that would be roughly 83 billion US dollars. At first glance, that sounds substantial. Large reserves give a central bank greater ability to manage foreign exchange demand and support financial stability. But there is another figure that deserves attention. According to the claims presented, the central bank's net reserves reportedly declined from approximately 130 trillion dinars to around 102 trillion dinars since the beginning of 2026. That would represent a decline of roughly 28 trillion dinars. If accurate, this could indicate that defending the current exchange rate system has required significant financial resources. When demand for foreign currency rises, a central bank may need to intervene. It can supply dollars, it can tighten compliance, it can change access to foreign currency, and it can use other monetary tools to reduce pressure. But interventions have limits. This does not mean Iraq is running out of reserves. It means the direction of reserves is something investors and policymakers should watch carefully. The important question is whether the decline is temporary and manageable, or whether pressure continues for a much longer period. Now let's move to another economic signal, the Iraq Stock Exchange. The video cites approximately $290 million in trading volume during the first half of 2026, along with a reported return of 16.52%. Why does this matter? Because financial market activity can provide another indication of investor confidence. A stronger and more active financial market can support economic development. But again, stock market performance does not prove that a currency revaluation is coming. It is simply another piece of the larger economic picture. Then there is digital banking. According to the information presented, Apple Pay has launched in Iraq through Credit Bank of Iraq. At first, this may seem unrelated to the exchange rate, but financial modernization is much bigger than currency valuation. A modern economy needs secure digital payments. It needs electronic banking, it needs reliable transaction systems, and it needs banks that can connect with international financial infrastructure. So, developments in digital payments can be viewed as part of Iraq's broader financial modernization. But, once again, Apple Pay does not mean a revaluation is coming. It simply shows that parts of Iraq's banking sector are becoming more integrated with modern payment technology. Now we reach one of the most important developments, correspondent banking. The video claims that 7 Iraqi banks have reportedly restored correspondent banking relationships through cooperation involving the Central Bank of Iraq and the U.S. Treasury. If confirmed, this could be a major step for Iraq's banking system. Correspondent banking allows banks in different countries to conduct international transactions with one another. Without these relationships, international transfers can become more difficult, slower, and more expensive. International banks also care deeply about compliance. They want strong anti-money laundering systems. They want transparent ownership structures. They want reliable transaction monitoring. And they want confidence that their banking partners can manage financial risks. Therefore, restoring correspondent relationships could represent meaningful progress toward reconnecting Iraqi banks with the international financial system. And this may ultimately be more important than any rumor about the dinar, because a stronger banking system creates the infrastructure needed for international trade, investment, and financial integration. So, what happens if we put all these signals together? The exchange rate review, the widening parallel market gap, the court ruling on redenomination, the reserve changes, stock market activity, digital payment expansion, and correspondent banking improvements. None of these individually proves a revaluation, but together they may indicate that Iraq's financial system is entering another phase of reform. That is why some observers are calling this a cluster of aligned signals. But there are still major risks. The first is politics. Iraq's political environment can influence economic policy and the speed of financial reforms. The second is oil. Iraq depends heavily on oil revenues, meaning changes in global oil prices can have a major impact on government finances and foreign exchange earnings. The third is the relationship between Baghdad and the Kurdistan regional government. Disputes involving oil exports, revenues, and budget arrangements can create economic uncertainty. And the fourth is the global financial environment. U.S. interest rates can influence currencies and capital flows across emerging markets. If global monetary conditions become more difficult, Iraq could face additional pressure. So what are the possible scenarios? There are 3 broad possibilities. Scenario 1, the official exchange rate stays where it is. The central bank continues defending the existing framework. Banking reforms continue, compliance improves, and the gap between the official and parallel markets gradually becomes smaller. This would be the slowest and most conservative path. Scenario 2, Iraq makes a gradual, managed adjustment. Instead of one dramatic move, policymakers could potentially change the official exchange rate in a controlled way. This would give businesses and consumers more time to adapt. but such a decision would depend on inflation, reserves, government finances, and broader economic conditions. Scenario 3, a major external or institutional event accelerates the process. That could involve a significant international financial agreement or another development that changes Iraq's economic environment. This is the most speculative scenario. There is currently no confirmed date, there is no confirmed size, and there is no official guarantee of a sudden revaluation. That is why viewers should be careful with viral claims promising a specific date or exchange rate. The strongest evidence will always come from official sources and verifiable financial data. So, what should you watch next? Watch the central bank's official exchange rate policy. Watch the gap between the official and parallel markets. Watch Iraq's reserve levels. Watch banking compliance reforms. Watch correspondent banking relationships. Watch oil revenue agreements. And watch any official decisions involving redenomination. These indicators will tell us far more than online rumors. The biggest takeaway is simple. Iraq may be going through a significant period of financial and banking reform, but reform does not automatically mean revaluation. Redenomination does not automatically mean increased purchasing power. A court ruling does not equal a currency reset, and a widening market gap does not guarantee that the official rate will suddenly change. What we have instead is a collection of signals suggesting that Iraq's monetary system is under pressure and that policymakers may be evaluating their options. The next few months could therefore be extremely important. The central bank may maintain the current rate, it may gradually adjust the exchange rate, it may pursue redenomination, or a larger economic or international development could change the situation entirely. For now, there is no confirmed major revaluation and no confirmed date. But if the reported exchange rate review, banking reforms, reserve movements, and international financial developments continue moving in the same direction, Iraq's currency story could become much more significant. And sometimes, the biggest financial changes do not begin with a dramatic announcement. They begin quietly. Inside central bank policies, inside court decisions, inside banking systems, inside international agreements, and inside the numbers that most people never notice. That is why August 2026 could be an important period to watch, not because a revaluation is guaranteed, but because Iraq's financial system may be preparing for its next major chapter.